Welcome back, everybody. Welcome back to the channel. We are back down here at the rental property. It's time to get some work in. We're off school today for fall break, so I've got the day to try and get some work in on the house. The goal for today is to get this room right here painted, get this third bedroom, front bedroom painted, get the walls painted, get everything cut in, at least hopefully get 2 coats of paint on it before we have to leave later to, go get a run in before we go to football practice. But yeah, that's the goal today. We're gonna get this paint in, going to see how far we can get. We had a couple stops this morning, stopped at Lowe's to get an extra padlock and a set of bolt cutters to cut a padlock that was on my garage off because I didn't have access to it. So cut that off, put a new one on there. Now we have full access for storage and privacy and security. Obviously got the working pups here with me. They come down here with me, get to work. See, they're my personal protectors down here. Don't think I'll need them for that, but you never know. But yeah, the goal is to get this room painted, see how far we can get, maybe put some ceiling fans together, maybe get into the hallway painting, maybe get into the kitchen, but who knows. Goal is to just try and get as much work done as we can. Went and got the paint a couple nights ago. We're gonna do it a nice, like light tan. Give it that rustic old style, and just that cool to go with the stained woodwork. So yeah, let's get the painting. This is one of my least favorite tasks, is cutting in around all the trim. I don't mind rolling, I don't mind painting, but I do not like cutting in. It's so time consuming. It's just annoying, honestly. But, gotta do it. It's one of the things you just gotta do. You gotta suck it up and do it. It's part of it, because you don't want it looking like junk. The end, so just gotta suck it up, get the painting. I think this should be a good looking paint color, but we'll see once we're finished. I'm gonna go get me a ladder so I can get up to the top here. What do you think, fellers? Just getting me a ladder, getting the ladder. Corners aren't terrible because you can just slop it around, but boy, I hate going around the trim. Plus I've got this thumb issue from sports that I can only hold the paintbrush like this for so long before it starts swelling up. But again, just gotta deal with it because I gotta do it. So this needs to get done. So you just gotta deal with that type of stuff. Never gonna be perfect. And I don't want to hire painters to come in and paint all this because boy, that would be an expensive bill to have somebody come in and paint all this. So definitely not doing that. I'm an able body and I can paint, so. That's how I try to cut down cost as much as possible, is by doing a lot of the work and maintenance and everything, upgrades, everything of that nature. Do it all by myself with the help of my family, my dad in particular. He helps me with a lot of the stuff, teaches me how to do things, so that saves a lot of money when it comes to maintenance and management and all of that. This stuff's just soaking into these walls. All right, first coat of paint is done. We have cut in and painted all the walls in this room. Took us about, time we start, about 9, about an hour and a half, hour 45 to get this whole room painted. It's not terrible, but we're about to head back. This wall should be dry since I did that wall first and then I went all the way around the room. This wall should be relatively dry to be able to start putting a second coat on. So goal is to get a second coat on this. Hopefully it doesn't take me another hour and a half, hour 45. Hopefully this time it goes quicker. And yeah, get this painting for this room done. It'll be the first room that is finished. I think it looks pretty good. First coat looks pretty good. It's stuck pretty well. the wall absorbed it pretty good. There's no real spots where it looks bare, which is good. So yeah, splattered a little bit, but that's gonna happen. Like I said, I'm not a professional, so. What's up, Maybe? I didn't get any on the dogs, which is good. Hi, buddy. Moosey's back there just chilling. What's up, buddy? This is what he does. He just burrows his head right into my side. What do you want, bub? All right, let's get painting. All right, so something I'm gonna start sharing more about, obviously, is the work I'm doing on this rental property, obviously, because already posted one video about renovations and how they're going. That one was me tearing out this kitchen and the kitchen upstairs. But I get a lot of questions about, how'd I get into buying real estate like this, rental properties, and two, how I do it. Question number one, how'd I get into it? I don't really know. In my college, started seeing videos about it on social media, on YouTube. And I started watching these investors who were investing in rental properties, and I really caught my interest, but I had no idea how to do it or how to go about it. So I just started watching more videos about it, looking it up, seeing how these people were doing it, seeing how it worked. And I really got intrigued by just the whole process of it. Because, I say this, I play adult Monopoly. I play real life Monopoly. But that's the truth. That's what I'm trying to do, is play real life Monopoly. And as a kid, I absolutely loved playing Monopoly as a kid. Loved it. It was one of my favorite games to play. And when I got older and started seeing these videos, I'm like, this is kind of like playing Monopoly as an adult. Like, buying these places and then you rent them out and people pay off the property for you and you get these tax benefits. And I was like, holy cow, this is really cool. So I started looking more into it. And, I would start looking at properties and got connected to a real estate agent, and all of a sudden I'm searching properties like on a daily basis. I am just trying to find a place, and I'm also watching more and more videos and started reading books about how to invest in rental properties or invest in real estate. And so I started, like I said, looking, and now this was during COVID. So, it was probably the worst time for me to start looking for properties like this, but it is what it is. You can't be perfect. You can't have the perfect timing on everything. So I was looking, and, I got into connecting to this real estate agent. I looked at one property. It was actually one of the first ones I ever looked at, and I loved it. I wanted it. I put an offer in on it. I had already been pre-approved. This was like 4 months after I graduated college. I had a full-time job, And once I got that full-time job and was about 3 months in, I was like, all right, I'm gonna get pre-approved and I'm gonna start looking for a property. And I'm just gonna jump in because that's the only way I know how to do it, is by doing it in person. So I was like, I'm just gonna jump in, found a property that I liked, put an offer in on it. The day after I put an offer in on it, the owner died in a motorcycle accident. Ended up ruining the whole deal. I mean, rest in peace to that guy, but it ruined that whole deal. So that was my first experience at putting a offer on a property. I put a property offer on this property, and the next day the guy dies. It goes into probate. The guy's ex-wife takes over, and next thing I know, I never hear about that property ever again. And so life goes on. I keep looking, and the time during COVID, it just keeps getting deeper and deeper into how that was working. You know, I'd go look at a property. I'd see a property that was interesting pop up on the market. I'd contact my real estate agent. I'd say, hey, can we go look at this? And we'd go look at it that day. I'd say I like it or I don't like it. If I liked it, I'd put an offer in on it. By the end of the day, the place would be in a bidding war because rates were so low that these investors were just jumping on everything they could find, anything and everything that they could find. So I went on with life. I never got a property because I just didn't want to do the whole bidding war thing. And I wasn't going to overpay for a property. I ran the numbers like I had seen on the internet. And if it didn't make sense, it didn't make sense. So I would move on. And that's what I would do day in and day out. And going forward, I would look at a property, I'd put in an offer, and it would get declined because a cash offer higher than what I offered came in, and that's what they were taking. And it started getting really annoying, so I started looking at for sale by owner properties, trying to connect with owners who are selling their properties by themselves without a real estate agent. I was like, maybe that can get me in the door with a property without having to, maybe that's not on the market, it's not getting as many eyes on it, maybe that can get me into one. And luckily I found a property in a neighborhood that I knew, kinda, and I contacted the guy, gave him a call, and met with him, saw the property, and ended up making a deal with this guy. I think he had it listed for $325, $350, and by the time we negotiated, I had him down to $285. I bought my first property, rental property, in 2022 for $285,000. Now that was when rates were still low, but they were starting to come back up from COVID, like 0% levels. And I think I got a rate of like 4.5%. I was pre-approved, I bought it, and next thing I know, I have a $285,000 property that I put $20,000 down on as an FHA loan, and I didn't know what I was doing. I didn't know how to handle a rental property. I didn't know how to deal with tenants. I didn't know anything, but I just threw myself into it. And then literally the first thing I do the first week I own it is I kick somebody out of the property because the guy who owned it prior to me had rents that were extremely below market, and I'll get into that in a little bit, but they were extremely below market value, and I needed to get into one of the units. One, because an FHA loan, I need to live in the property for a year, and second, I wanted to renovate the property and increase the value and increase the rents. And I took about 30 to 45 days to get this lady out, her and her family, or her and her child, and I began renovating that unit. This place had 3 units in it and a garage that was also making money, and the guy had rents. He was collecting for all 4, for the 3 units and the garage, collecting $2,700 approximately. And that covered the mortgage that I was paying at the time, but I knew it could be higher than that. I knew it could be worth more. And I knew that the work that me and my father could do together could increase the value and increase the rents substantially. So we went into that unit, tore it apart basically down to just the walls and the floors, put a new kitchen, put a new bathroom, refinished the floors, actually ended up putting luxury vinyl throughout the property, throughout the unit, and rented that unit out for $1,500 at the time. So already half of what that guy was already collecting for all four, I was collecting from one. And then went into the next unit, which was the one I ended up living in, and started on that one, got that one done. I lived there for about a year and a half. And as I was living there, I basically was having my mortgage, my utilities, and all expenses were being paid for by the tenants that were there, by the three other units that were had income producing units, which was awesome. So basically I was living for free. That's what they call house hacking. So I was house hacking and I didn't even know it until I started looking it up, and I'm like, holy cow, this is what I'm doing. I hear people talking about house hacking and I'm like, wow, that's exactly what I'm doing. Sweet. And go on for about a year and a half while I'm living there. Not really cash flowing too much off the top, but I was living for free, so I was pocketing all the money that I was making from my full-time job. And going forward, I lived there for about a year and a half, because for an FHA loan you have to live there for a year, and ended up deciding to take a different path with my life at the time and moved out of that property, put in some luxury vinyl floors in that unit, and rented it out for, I can't remember, but at the current moment it is rented out for about $4,500, and which means I took rents from $2,700 to now $4,500, and so I increased rent $2,000 a month, the rent roll. Now, the property I'm in now, doing work in, is my second property. It's the second one I'm working on, and it's the way I bought this one was different than the way I bought the first one. Now, I bought this one with a cash out refinance loan. And I was able to basically take the value from my other property and go and get a new loan. So how I did that was I basically, like I said, renovated the property. 2 years later, down the road, I bought it for $285, and it was now appraised for $450,000. So I took it to a bank and said, hey, give me a new loan. They gave me a loan to value about 25-30%. They gave me a loan of $300. I owed like $260, $265 on that property. So they pay off that loan, and I take the difference of $300 minus $265,000. So it's at $35,000 that I take after expenses and after fees and all that. You know, I may have gotten a check for $15,000, $20,000. I can't remember what it was. But when it comes down to it, that gave me the opportunity to take that money and put it into this place. Take that money that they gave me and put it as a down payment into this property. So basically I took the money out of that previous property, put it into this one, and was able to purchase this new one. I bought this one under an FHA loan as well, so I am going to live here, but I got to get this place fixed up a little bit before I start living here. And so yeah, that's how I did that one, or this one. And now the goal is to renovate this place, get the rent roll up. This place was actually not rented out except for one unit. One unit was rented out, and they're actually moving out as we speak. really because they didn't like the rules and regulations and just some of the things we were changing about the property, so they decided to move out. It is what it is. So now I'm gonna have a completely empty property, which is awesome because it gives me the opportunity to renovate, but also it sucks because I have a mortgage due here in a month or two, and I'm gonna have to cover that with reserves that I have until I can get this place rented. So we're working on the biggest unit currently that we have and taking that, trying to get that ready and rent it out to basically offset that mortgage and the expenses as we can go upstairs and renovate those 2 units and get those 2 units ready to go and rent it out. But the goal is to get this rental up to about $4,500 to $5,000 a month. Now, people hear that and they're like, holy cow, you're getting a bunch of rent. Now you got to take into consideration there's a mortgage, there's expenses, there's utility costs. This property right here, none of the utilities are separated. My other property, the gas and electric is separated. I just pay the water. But this property, the gas and electric is all in one, the water is all in one, so I have to pay all those utilities. So that's not counting in also capital expenditures, like when a fridge goes out, or you gotta replace a roof, or you gotta fix the windows, or whatever. And that also doesn't take into account for maintenance, normal maintenance stuff, like water leaks, or pipe bursts, or a toilet goes out, or a sink goes out, or any of those things. If, a door handle breaks, whatever you want to think about a house, the water heater goes out, any of that, those are all expenses you have to account for. You also have to account for vacancy. When a unit is vacant, you got to have money set aside to basically cover that cost while you find a new tenant for that unit. So when it comes to taking all that in effect, I mean, you're between the mortgage and expenses that you're going to put aside for this property right here, you're probably looking at $3,500-ish, $3,500 to $4,000 a month. You're going to be putting away towards your expenses, mortgage, everything. So that's your expense ratio. And so let's say you're bringing in $4,500, your expenses are $3,500. Yeah, you're cash flowing $1,000, but that's not taking into effect keeping a little nest egg on the side in case something big comes up as well. So that other property cash flow is about $500, $700 a month. So the goal is at the end of the day, at the end of the month, to be able to cash flow after all expenses are paid, after mortgages are paid, be able to cash flow anywhere from $900 to $1,500 to $1,500 a month. And yeah, that sounds amazing. That sounds like it's an awesome little side gig, but that's not also taking into effect the risk that comes to owning a place like this. I mean, at the end of the day, this place could catch on fire. Yeah, insurance would pay for it, but it wouldn't pay to rebuild this property the way it's built right now. You're not taking into effect getting proper tenants, the screening tenants. You get a bad tenant in here that ruins the property, all of a sudden you have a massive cost on your hands to fix that property, fix that unit. So it's a big risk, but it's something I love because at the end of the day, I would love for this to be my full-time gig at some point in my life, whether that's 5 years from now, 10 years from now. But I always said that to get to that point, I would have to be cash flowing after all expenses are paid, about $8 to $10,000 a month, because that gives you a little buffer, probably more. The 10 grand is probably my limit, because you had to have a buffer. Because let's say all of a sudden you have 2, 3, 4 units all go vacant at once, that 10 grand all of a sudden turns to 5 grand a month, and you're stuck with the rest until you fill those units. So you got to have a buffer in between there. But that's the goal. I love doing this stuff. I love working on the properties. I also love bringing my fellows to work with me. Being able to spend my time with them while I'm also getting work done and trying to make money is a great thing. It's fun. I enjoy it. It's awesome. But we got to work to make it a full-time thing. Now, people also ask, what else, do you invest in anything else? I don't diversify in anything else when it comes to investing wise. I have invested in the stock market previously. I have done all that. I have a high yield savings account that I keep extra money in, just to be able to be making some sort of interest on the money I have sitting aside for properties like this. But I am all in on rental properties. At some point in my life, I want to do fix and flips as well. I don't have the full contacts yet for investors or for hard money lenders or private lenders. I hope to get there one day, but I'm not there yet. So I also know more about rental properties now that I've owned one for 3 years. Now I'm in another one. I don't understand the business fully. I'm still learning. Heck, I had some guy that has been in the business for 45 years come buy stuff from this place that I tore out, and he was teaching me different things that I didn't know about. So I'm not saying I know everything, because I don't, but it's my comfort zone at this point, and I know I can make money with it. I know it can be profitable, and I know it's a good investment, so I'm going to stick with it. Like I said, at some point, I want to get into fix and flips. It's just finding the right properties at the right time and knowing I can do it. But yeah, at the end of the day, this is what I see as my long-term investments, because I know down the road, let's say 20, 30 years from now, these loans could be paid off, these mortgages can be paid off, and that's saying I don't cash out refi into more and more properties, because I probably will. So maybe it'll take 50 years to pay off all these mortgages. But then I'm not using my own money. I'm basically recycling money out of a property, constantly buying new ones, instead of constantly buying one, saving up, buying one, saving up, buying one, saving up. I can buy one, fix it up, get a higher valuation, take that money out, put it into a different one. Buy one, fix it up, take that valuation up, get a new loan, put that money, same money that I put into that one, take it from one property, take it to the next. So, but still at the end of the day, 30 years from now, if I want to retire and I don't want to do it anymore, I don't have anybody behind me who wants to take over the business, you can sell the properties off and sell them off one by one or a couple at a time, and there's your retirement. Because like I said, I bought this place for $350. 30 years down the road, it could be worth $700, $800, $900, $1 million. So that's a massive increase in value. And as long as we can upkeep it and constantly have tenants paying down the mortgage, I'm not putting any of my money into the mortgage. I'm having tenants pay it down. So really, I don't have any money into the deal other than what I put into it up front, because tenants will be paying for the mortgage, they'll be paying for the maintenance, they'll be hopefully paying for the utilities, covering everything. So you're not paying for the property. So at the end of the day, it's like not a money glitch, but it's all income at the end of the day. So